back to PayPal. This is the new SoFi. I actually think PayPal is the new Nvidia.
What? Ladies and gentlemen, with me here today is the great and powerful Dan Dolev from Mizuho Securities. So, Dan,
Hey,
how you doing?
all right, Tanner. Good, good. Back from lots of travel and heading into even more travel. That, you know,
Yeah.
I'll spend more time outside the US in March than in the US if that's, worth anything. Some pleasure, some not so much pleasure, some work,
Yeah. Yeah.
as you know.
I mean, we just came out of, well, I mean, definitely for fintech, we came out of earnings season, and you guys must have your hands full.
I know I'm still recovering. This has been you know, an earnings season without mercy. Let me put it that way. Like the stock movements this earnings season have surprised everyone. And obviously, me and I've seen a lot of earnings seasons. Think about 17 years times four, whatever that number is. Uh, whatever. Uh, so 17 times four. I've seen a lot of it. I've seen a lot of it, and this was pretty brutal. Like
Yeah.
the
Yeah.
market has no patience for anything. A littlest thing, we can go through that in the names that we love. People are puking the stocks.
Yeah. Um, I mean, obviously, I'm a really big fan of SoFi. I thought that their report was good, but I don't know if the market appreciated it as much. What did you think about
It's
Q4?
exactly, great minds think alike. Like that's exactly what I was, trying to say. Like I remember, so SoFi literally hit it on all cylinders, right? Everything's great. They're doing great on originations. They're doing great on, they're beating, they're raising, but they raised the medium term target on revenue pretty significantly, right? So remember, they have these like 26 targets, but they forgot to raise the medium term EPS target. They kept the EPS. So the market immediately, the signal to the market was, there's a problem with profitability. Something is going on with profitability. Why aren't
Sure.
you telling me what's going on? And sort of the psyche of the market is like, shoot first, ask later, boom. Stock went down like 10%, I think, right? Something like that. So it was just that one issue, because other than that they were doing great. So the issues, for example, that Marqeta was seeing on the Galileo side, they didn't see any of that. And the reason for that, we can get into more detail, is like they're the sponsor bank, so they don't have to go out and like find these like banks, these kind of shadier banks to do those deals with, because they've got their own bank. So they're kind of immune to the regulatory issues that were hurting Marqeta on the lending platform. I mean, it's just, that's like an amazing growth engine with very little risk. And beating raising your top line medium term guidance. Like I don't know what the market would want more in order to get more
Sure.
constructive. But that's what happened. That was sort of the issue, that, and the reaction was very quick and abrupt.
I remember whenever I was going through it, I like 2025 EPS was, I think they came in at 27 cents is what they wanted. I definitely thought that they were going to shoot over 30 cents, but it seemed like they were going into growth mode for 2025.
Hmm. Hmm.
That threw me for a loop, but still kept 2026, like you said, the exact same. I think it's 55 to 80 cents. Um,
Correct.
they are hitting on all fronts, but I was a little bit disappointed on the Galileo side, obviously, because it might be more of a macro thing. It's not like Marqueta's not seeing these issues as well. But
Hmm.
what exactly is this problem between these issuer processors like Galileo or Marqueta? Is this something that is like we're going to cycle out of? Or are they going to go back to growth? Or is this sort of a segment of SoFi's business that doesn't deserve a good multiple?
Look, I mean, the debate on Marqueta, and I think that's what speaks. I mean, I have a buy on Marqueta and I like them, but that's what speaks in favor of Galileo at this point. The debate on Marqueta is now, is this a company or a feature?
Mm,
And the reason for that is, to your point, and these are the same businesses, right? They're doing kind of debit issuer processing for fintechs. The debate is now, is this like, is there enough kind of juice in this Marqueta thing to actually maintain it as a real company, or does it have to get acquired by someone? Like I think that's a big debate on the street right now. But to your point, what was haunting Marqeta and the reason it did not impact Galileo, I think that was your question, is the banks that were sponsoring those fintech deals, right? So think of like when, I mean, it's just an example, like DoorDash wants like a debit card, right? So they
Sure.
need a sponsor bank. Those banks got really scared by the FDIC and CFPB and just whatever regulator
That
of
whole
your choice,
synapse collapse, right?
the synapse collapse. And they didn't want to take the risk. So they stopped sponsoring some of those fintech
Mm.
programs. And that created sort of like in that value, in that food chain, Marqeta missed Q3 and was like okay-ish in Q4, but not stellar. It was okay. They got, dug themselves a little bit out of the issue, but it's not completely. They had the CEO change, Simon Khalaf left, and so all these, kind of, it helped the stock. The stock was up a lot, but are they out of the woods? I don't think so. It's going to be, and I hosted a call with like an expert in the space, and he also said like these things take time. Like you're not all of a sudden, I guess chopper gets chopped and they can like issue cards again. It's
Yeah.
not that quick because there's multiple. There's the OFC, the CFPB, the FDIC. Like there's a bunch of regulators that are control. That it could also be like a local prosecutor in a state who could just make their life miserable. So the banks are scared.
Ladies and gentlemen, we're having a little bit of camera problems, but don't worry, we have switched to Zoom. So they are the market leaders.
Killer app.
Dan, let's move on. PayPal stock, $96 price target on this company. What were your thoughts on Investor Day, and where do you think this company is going forward?
PayPal is the new SoFi, right? It's become the most, remember like 2 years ago how controversial SoFi was? And there were all these bears on the street. Some of my esteemed competitors hated it with a vengeance. And I was hearing $3, $2, going out of business, bankruptcy. And now and now we're here and it's gonna grind higher. I have no doubt once this like growth scare, gets removed and Trump forces Powell to lower rates, which is what he's trying to do. This will happen. But back to PayPal. This is the new SoFi. I actually think PayPal is the new Nvidia.
What? What do you mean?
It's the new Nvidia. Well, what's, how much EPS growth do you get from Nvidia in 3 years? If you look at consensus today, I think you're getting like low to mid-teens, right? EPS growth. Consensus expectations, not me.
Okay.
What is PayPal telling you? 20% long-term EPS growth. Why shouldn't PayPal be the new Nvidia? Why shouldn't be the new hot stock for retail investors?
I think the
Got to
difference is that, Nvidia top line is growing very quickly, and PayPal is telling us that their top line is
not in 3 years. I mean, it's growing very quickly right now, but if I look at consensus, I can actually power at it. I'll take the benefit of having Bloomberg in front of me.
yeah, that's it's a
Pretty
good
good,
advantage.
right? It's a good advantage. So I can look at consensus real time. So Nvidia in 3 years, if I look at 2027 and above, right? 2027 and beyond, top line growth. What's your number? What's your guess? You know what consensus is expecting for 2028?
Is
Yeah,
that
no,
for
right.
27 to 28 or compounded
Or
across all 3 years?
not compounded. No, I mean this year. I mean 25 expectations 114.
2018,
20
I'd say probably 19%, 20%.
almost, yeah, good guess. 14% with 15% EPS growth. I mean that's literally PayPal's telling you 10% plus um, transaction margin growth in a couple of years and 20% EPS growth. It's better than Nvidia.
Yes, but in between those years, like
Doesn't
next
matter.
year's growth is for Nvidia is
I'm
what,
thinking long
60%?
term. Yeah, but the stocks are, remember, stocks are pricing in the future. So when things are bad today, or when the stock's like looking the way it looks like today, it's doing that because people are expecting basically 0% terminal value for PayPal. And what I'm saying is you could have said the same thing about PayPal like 3 years ago, and it hasn't happened. They're still there, it's still, alive and kicking,
Yeah,
right?
yeah.
So I I understand it's not the same business model. They're not making chips, but it's really so much more resilient than what people are giving it credit for, right? Um, the problem we have, like, did you go? Were you at the analyst day?
Not PayPal's, no.
No, you came at you. I saw you at the Robinhood analyst day. It was the same exact room. That's why I'm confusing the two
Got you.
events. The problem at the Apple at the PayPal analyst day is that 98% of the people that were sitting in the room were iPhone users.
Mm,
And so it's like, I remember I used to have this friend 20 years ago. He used to cover tobacco companies. And I was like, do you smoke? He's like, no, I don't touch this. It's cancerous. He used to have like behind him, it was at Merrill Lynch, the old Merrill Lynch, like, not B of A, the old Merrill Lynch. He used
yeah,
to
yeah,
have
yeah.
like all these like packs of every cigarette from all over the world. And he was like, I don't touch it. So he was like the tobacco analyst. So it's like the people that cover PayPal on the institutional side in New York use an iPhone. So they can't envision how valuable PayPal is to a lot of people in the world. Like I was, as you know, I was in Israel a couple times, in the last 3 weeks, and I'm going to Europe, and you see a lot more. I mean, the data is out there. It's like Android versus the iOS, right? Um, you see a lot more iOS, Android form factors, whether it's Samsung or Chinese or Tanner. There you go. So, I mean, that's an important thing. So I mean, do you use PayPal? Don't say
I
no. Probably.
I do. I do.
Yeah, there you go.
And for my
So
business, a lot of the payments go through PayPal.
there you go. There you go. So I think there's this bifurcation, and like the people that are supposed to make those investment decisions and they're writing notes, like my peers and the buy side, they're all iPhone users. Unfortunately, I am as well. So it's hard for us to see the value that PayPal provides. But the reason I'm saying it's the new Nvidia because there's just so much more they're going to do with this asset. So give you an example. They hired the head of advertising from Uber,
Yeah, Mark
and
Reether,
if
Dr. Mark
Mark,
Reether.
you know him, right? Or you've heard of him.
Heard of? Yeah,
Uh,
I don't know him.
I don't know him either. He didn't come to the analyst day, which I was surprised actually. Which it's I asked Alex at the analyst day, like, what's the how conservative is the guide? And he goes like, we don't guide to anything we don't see. So he probably didn't include any or very immaterial amount of like advertising in this. But if you think about this, they he built $1 billion business at Uber, this Mark guy,
Yeah.
and they've 50 million MAUs. That's a $20 ARPU. If you take a 50% haircut and slap that ARPU to like what 60, 70 million, Venmo users, 150 million PayPal users. It's just the sheer numbers there. Like that just by itself is like a 5 to 10% upside to top line revenue and like double that for transaction margin dollars, which is kind of 50% of top line revenue. So that's one upside they didn't talk about. Like, why can't PayPal replicate Bill.com? So Bill has like 500,000 SMBs. PayPal has 30 million SMBs.
Yeah.
So
Yeah.
take a 5% attach rate, that's 1.5 million SMBs. That's already 3x the size of Bill. And just think about it. Where does Alex Chris come from? He came from Intuit. He was GM of QuickBooks. Like this whole like, this zip code of like Bill.com, Intuit, QuickBooks, that's he's like bread and butter. So there's so much optionality there. So I stick with it. PayPal is the next Nvidia.
I actually was a shareholder of PayPal for the longest time, and I no longer am after Q4.
Interesting. So what made you capitulate?
So one, um, I am growth 100% of my portfolio. Nvidia, for example, is the number one company in my portfolio. Um, PayPal, I felt like whenever Alex stepped on, made it very exciting. This is a value stock, well, priced to be a value stock, but we are going growth. You know, we're going to take Braintree, we're going to start valuing ourselves, we're going to get better pricing there. Venmo is doing great, debit attach, pay with Venmo, all of these things. But as much as they would talk about all these programs that they would talk about, the top line growth at the end of the day was going up mid-single digits. And whenever I originally purchased it in the first place, it was because of a turnaround on valuation, which I still did make some money. I got it in the 60s and 50s and got out in the 80s. But I wasn't happy with the guide that they put in for 2025. I thought that the speed in the obviously this is a massive cruise ship, and turning this around is going to be a long time. But I just was a little impatient with that turnaround. Now, of the more recent sell-off, I mean, I might even take a starter position again. I mean, the buybacks as a percentage of the total company is just crazy. But the Nvidia call is something I haven't heard before. That is
You can use that as the title of this podcast. Dan Dolev says PayPal is the next Nvidia.
that's a good one. You'd be good at
What I
this
do.
job for sure.
Thank you. That's what I do. That's what I do. But I'm telling you, there's something there. I know it sounds crazy, but you've heard it here first. There's
Let,
something there.
let's talk
It's
about
an
the line
it's
items.
an
So,
analogy. It's an analogy. It's that they're not going to start making chips and become. But the idea of PayPal being a very hot retail stock in a couple of years, I wouldn't dismiss this completely.
do you think that they could hit all-time highs sometime in the future?
I wouldn't be sitting here if I didn't.
Okay. And do you remember what that was? That's somewhere in the 300s, right?
It was like 300. It was like Square, Block, XYZ.
Yeah.
They were both in the 300s back in. I mean, look, 2021 was a bit of an outlier for everyone. But if we can meet halfway through in the middle, high hundreds, 200, I mean, a couple of years. Again, my price target's like 18 months. Uh, I think they'll get there,
Yeah.
but I I just see this as a huge opportunity if he can change this. Like, I think there's maybe just before we switch topics, I think the opportunity here to be serious is pivoting away from payments and becoming more of a software company. And then it's a different ball game. And no one can do this better than Alex, who's sort of bread and butter is into it. Like, if he can like get software multiples, because most of what happened at PayPal is just derating. Fundamentals have
Sure.
been the same. Like, they're still doing 5 to 6% growth on the branded checkout. They're controlling what they want to do on Braintree. They raise prices, it goes down. They lower prices, it goes up.
Yeah, but they
Venmo
weren't
is
doing
doing
5 to
okay.
6% growth in 2021.
No, they were doing 20, but
Yeah.
like that was, when Biden was handing everyone checks to buy Nike shoes. So I think part of what you're seeing now, and this is maybe another interesting observation, PayPal is getting unduly punished because people think they're losing share. The evidence that, it's like, it's like our research suggests, right? The evidence we track PayPal's top line branded growth versus their 14 top merchants, Etsy, Target.com, Nike, et cetera, et cetera. If you do an index of the growth of those merchants, you're basically seeing that it's growing 5 to 6% as well. So they're actually growing in line with their top merchants. The problem they have is they're exposed to like shitty merchants. That's a different issue. So they're not
Mm.
exposed to Shopify or Amazon. So ex Amazon and Shopify, they're doing really well. So it's good news, bad news at the same time.
Aren't they
But the
doing some
opportunity,
payment authorization for
Prime, something on
Shopify
Prime,
now?
but it's for Prime they're doing so for Amazon Prime, but it's not meaningful. I think you can do some Venmo, but it's not like you go on Amazon and PayPal shows up as like a
Yeah, yeah.
Prime checkout
Yeah.
button. It's not there. I think to your point, yeah, there's opportunity in the future, but they probably won't get paid that much for that. Remember, the gross take rate for PayPal is like in the threes. Amazon's not going to pay them three.
100%. But this is also why, like, I mean, I have been worried about two competitors, and one of them is not a company. One is more of a technology, but stable coins versus payment companies. I am worried about top line growth. And then two, Adyen is just such a monster. Um, but I'd like to hear from you. Obviously, you guys have so much more research than me. Do you guys worry about now that Braintree is starting to price more to their value that they can
Mhm.
compete with the likes of Stripe or Braintree?
They're they're deliberately hurting growth, right? So it's like a little like Trump. He's like deliberately hurting the economy to get something. They're deliberately hurting growth in order to price for value and take up the take rates. I actually happen to think if I were Alex, I would do it differently. I kind of disagree with him on that.
Hmm,
I think the strategy that his predecessor had, Dan Schulman, was not, I think it should have, I think they should have reconsidered it because they could use, oh, it's like a lost leader. So if you think about this, so Braintree, to your point, is basically a direct competitor to Stripe and Adyen, right? And to a lesser extent, well, like World Pay's e-com business, but that's just like that one's under privately owned right now. No one cares. But those two big ones people care about. And if they can use better access to sort of better real estate on the checkout by giving Braintree away for free. And I think they're kind of losing that lever
sure.
if they're raising pricing and they're kind of the share shift is moving back to audience. So that's my only criticism, but I also don't know what's going on inside, and I'm sure that they thought through this and that's why they're doing it. So I'm just staring at it as an outsider and I'm like, why not just give it away for free and do a land grab like Amazon in 1997 and wait to make money down the road? Dude, it's $1.5 trillion. It's a trillion point six, 1.6 trillion in volumes a year.
Yeah.
You can find way to make margin somewhere else.
Yeah. Yeah. No, it is an interesting name. And thoughts on Investor Day, anything that blew you away or about how you guys were thinking about the company in general?
Yeah, I think the fact that everything they said was still conservative. So they put out targets. I think what you just said about 2025 is what the majority of institutional investors think. So you're not alone.
Sure. Well, I know
People
I'm
think
not alone whenever the stock
you're not
crashed.
alone. No, you're not alone. I am the contrarian on this one.
Sure.
So, and I'm the uber contrarian when I'm telling you it's the next Nvidia. You
Well,
might
yeah,
say
sure enough.
crazy. You might say crazy. No, but probably a little bit. But the I think what blew me away is I asked Alex point blank. You can read the transcript. I was like, what can go wrong and how conservative is the guide? And he basically told me they don't guide to anything they don't see. So all these things that we talked about, like disrupting kind of Bill, disrupting Intuit, disrupting um like the advertising business, all those things I think are incremental growth levers that they haven't really baked into the guidance.
And the customer counts and overall market share there, you think is going to continue to grow?
I did some work. I did some back of the envelope analysis just yesterday for a client. It's actually really interesting. I looked at ecom in 2018. It was about 3 trillion globally, and PayPal was running about 205 billion in branded checkout. Fast forward to 2024, ecom's like 6, right? And branded checkout is basically, 450 or something like that. So they actually maybe gained half a point of share on a global basis. I know it sounds crazy and it's counterintuitive because like the perception is they're share loser, but if you believe those numbers, and it's not like I got them from PayPal, I got those numbers from like a third, WorldPay publishes this like report every year, which basically they look at every country e-com penetration. And it's pretty thorough. So if you marry these two data points, PayPal's share actually went from like 7% to 8% over the, those 7 years.
I
Uh,
honestly, I could
Pretty
totally
cool.
believe it. I think a lot of people get lost in the numbers whenever they see Apple going from essentially 0% penetration to, quite
Yeah.
high, that they think that that's been taken from PayPal. But really, I think it's taken from manual entry for cards. It's just that no one wants to do that anymore. It's extremely bad
One
for the
point,
for the merchants as well.
yeah, it's like a trillion. I think that the statistic is like mind blowing. I think it's like over $1 trillion a year of e-com ex China, ex Amazon. That's basically manual entry.
Yeah,
Like I
which
do
is
this. So it's crazy. Like when I sign my, I pay for my kids like, baseball league, some quirky website, and you have to punch in your, credit card details. So, and now they're attacking that with Fastlane,
yeah. What do
right?
you think
And
about
that's like a
the
5 to 10% opportunity right there.
we're going long on PayPal here, but I also just had questions
Next
about like
Nvidia,
the
my God,
rollout on Fastlane seems a little slow.
it's slow. I mean, the checks have been really good, but I think that the reason it's slow is because they don't want to monetize it yet. They want to first roll it out. I mean, the checks that I'm hearing from people that have used it, that have been in the beta, were really good. People love it. It's really
Well,
seamless and quick
I mean, that's what I've heard. The conversion rates, like they're nailing somewhere like
in
high
double digits.
70s or potentially 80s. Like this is
Yeah.
unbelievable numbers.
Yeah.
But
I mean, now the bear case is that Apple is doing the same thing with like the Apple for desktop, right? So there's always a reason to hate PayPal, but at the end of the day, it's like an amazing company. It's a massive, tr 1.6 trillion dollars in volumes. I don't think it's going anywhere. And to your point, there's always a lot of people that, I mean, I was, I was on at the T-Mobile store the other day here by on in the east side, kind of where I live. And I asked him like how many people here buy iPhone versus Android? And he goes like at this location, like 90% iPhone.
yeah,
That means to me, if you think about the bell curve, that there's another location somewhere else in America that's 90% Android. And then there's a lot of PayPal users there. So it's just like I think it's just, geographic, God knows what, right? Like it's just people's have different preference. I told you I was in Israel last week. A lot of people don't use iPhone. I see a lot more with those, funny phones like the one you have.
people have a hard time understanding that some of these apps are actually like pretty geo locked in a way. If you look at, I'm sure you've seen similar reports like where Venmo users are versus where Cash App
Oh,
users are.
I
It's
I
like different
invented
parts of the
those
country.
reports. I invented those reports. So basically, it's not that much, I'm not bragging here or anything, but I think we were the first team to I'm talking like 2018. You basically go, it's very simple. You go on Google Trends and you say Cash App versus Venmo. You basically see like the whole southern US, like the Bible Belt or the Sun Belt or whatever you want to call it, is all Cash App. And
Yeah.
then East Coast, West Coast, um, Northeast, all Venmo. So it's geographic.
Do you
We
think that the
published on
growth in
this.
those customer accounts are done though for these types of like
Yeah,
I
that's
know Cash App
different.
got to what 57 million monthly actives and they've
Yeah,
held that for 4 quarters.
and you know what? It's really scary because I have an outperform on Square. I still call it Square. I can't help
Yeah,
myself. It's like
yeah.
it's idiotic that they changed the name, but um I worry. I really genuinely worry what would happen if they print a quarter and that number goes from 57 to 56. That could be a sad day for the stock.
Well,
Not saying I'm not predicting that's going to happen. I'm just saying it's a concern. And
you
I
don't have
love
to
Square.
predict
I'm
it.
just worried.
I'll predict it for you. I'm not a
You
fan
think?
of I used to be a fan of Block and then whenever I saw gross profit go down on a per you I think this actually wasn't the case last quarter, but it was like Q3 or something. It went down and I was like, are we banking the user base or not? Because that was my understanding is that okay, we're going to stay in the States. They are going to essentially try to bring up ARPU or gross profit per user. and really try to get direct deposit. And then it went down quarter over quarter. And I didn't understand. Maybe you understood it more, but that was hard for me to swallow.
It's tough. No, it's tough. I think they've tapped, I mean, I'm being a little cynical here, but they've, it's like tends to be more socioeconomic. And I think they just maximized the 57 million MAUs. Like there's just not in that socioeconomic group that uses the Cash App extensively. It's just they've reached everyone. So
Sure.
maybe you have some natural growth, people are born, people are dying, like, but you're not getting that incremental user anymore. And to your point, I think you're right. It's four consecutive quarters of 57. And Ryan and I on our team, we kind of like we talked about it. Like it's the 18 to 54-year-old cohort, they're kind of penetrating 40% of it. And it's like, I mean, maybe after we take over Greenland and Canada, then there's gonna be a lot of opportunity for
Yeah, I
Square.
mean, I'll
Maybe that's
download
the
all
bull
the apps
case.
whenever you guys come north. I mean, I'm
That's the bull case is like Greenland's like 57,000 people, so it's not that many. But Canada's pretty good. So maybe you know, after we annex them, then that's the opportunity.
I've already thought about it. I'm going to be honest, I'm going to use my banking on SoFi and I'm going to go to brokerage with Robinhood.
I, I don't blame you. I mean, it's where are you in Canada?
Yes, yeah.
Oh no, I didn't mean
Toronto.
to. You mean to be a There you go. But that's the opportunity. You get SoFi and Robinhood. You don't have to use, although I do love Mogo. Have you heard of Mogo?
Yeah, yeah. Yeah.
He's my friend. Greg's my
Got
friend.
you.
I love Mogo. So I feel bad for Mogo because Greg's my friend. But I
I'm
agree with you.
I
Yeah.
can't say I use them. I'm well simple if you follow
I'm
them
just
here.
very, yeah, no, I know. I'm just friends with Greg and I think he's a great guy and he's very innovative. So,
Sure.
but yeah, to your point, I didn't know you were in Canada. But yeah, that's it. When you guys come over, then you can, that's a lot more miles for Cash App and great apps for you as well.
I thought it was pretty clear that I'm in Canada. My skin is matching my white
Oh,
t-shirt. I thought,
I am like, look, I'm at the end of the day, I've been here many years, but I can't, the Israeli and me, I still can't tell the difference between, so I'm not, I've got bigger worries than, Canada becoming part of the US. I've got, you know, all the issues in Israel that's been like making me sad. So I'm not worried I've got bigger fish to fry.
yeah, yeah. We have there's two more names that we
Yeah,
absolutely
sure.
have to get through that I want to
Do
hear
it.
from you about.
Do it.
Um, Robinhood.
Yeah.
What did you think, first of all, about February numbers or January numbers?
I saw they came out like yesterday, right?
Yeah.
It's really, really strong, right? Like it was, I mean, kind of not directly tied to Robinhood, but we actually, I'm sure you saw that we had to take up our Coinbase numbers because they were better than expected. So, Robinhood is like a share gainer in this space. So their numbers are better than expected.
Which is
And
interesting, right? Like
mhm.
Coinbase totes that they're gaining market share, but then you compare it to Robinhood, and Robinhood's
In
even going
retail,
even
Robinhood is
fast.
the share gainer. No, in retail, Robinhood is the clear share gainer. Look, Coinbase has its place, right? I mean, they're the, and we warmed up to Coinbase. We upgraded it recently from an underperform to neutral. They have their place in the ecosystem. They've got tokens and they're big and they're important, but in this like retail niche, which is enormously important in crypto, Robinhood is like the killer app, no doubt.
What's the warming up to Coinbase? Because I have not warmed up at all.
Um, well, I think look, it it was hard to fight, like the uber bear case on Coinbase is that take rates are going to come down. And
Yeah.
what we've seen in this space, and we're trying to stay open-minded. And I think maybe a lot of my competitors are not. When they put a $2 price target on SoFi, they just like they don't see anything. And I'm trying to be very nimble here. Um, it it turned out that even Robinhood is taking up pricing in crypto. So it's like the instead of take rates coming down, you're seeing their competitor actually raising take rates and gaining share, right?
Yeah, but still,
And
the difference in take rate is,
is 3x. I get it.
yeah,
No, I 100%, but it's been like we've been fighting it for, the better part of the last 3 years, and it hasn't changed. So they haven't been forced to give discounts, right? So if that day were to happen, then I'm wrong. But again, warming up saying we went from an underperform to a neutral. I still love Robinhood way. I mean, any day Robinhood over Coinbase. But
agreed.
I'm not like a perma bear on Coinbase anymore. I'm like, you know what? There is a place for them, and we even said like, look, our price target is like 217. The stock was in like the 180s or 190s. There's upside. It's not as much upside as Robinhood, but there's a little upside. It's
Right,
good.
right.
It's better than feared. Better than feared. And look, I mean, their market share. They're not the market share gainer, but like Robinhood, but they're doing really well. And I think the worry on Coinbase, the reason the stock was down is because, to your point on stable coins, and we didn't get to talk about it, I mean, Circle now is in partnership with Binance. So USDC is a really important asset for Coinbase, but the fact that it's kind of like what I would like to tell my wife, we're not exclusive anymore. I'm just joking. You know what I mean? Like, so
Yeah,
not gonna happen. She's gonna just, kick me out. So it's not gonna do that. But my point here is like on, you know, US Circle told Coinbase, yeah, we have another relationship. And I think that the market saw through that and got a little worried.
I um I do like what they're doing on Circle, and I do think that crypto is going to be a massive disruptor for payments and all of these things. But whenever I see a lot of the flow go through institution rather than retail, and companies like Robinhood offering the banking ability, the brokerage ability, I just don't know why anyone would keep their money at Coinbase whenever their take rate is so high. And by the way, no one ever talks about this. Their take rate includes their massive growing base of Coinbase One users, and so like their take rate is even higher than what we're looking at.
Correct. The
You
actual
know,
take rate, if you're like a retail investor, pound for pound, trading $100 of Bitcoin, you will pay way more than 150 basis points on
so I
Coinbase.
I think the only way that they step into um, equities and everything is if it all goes on chain. Like I think that there's a potential way that, real world assets comes to Coinbase before they have to go to
And then
equities.
and that's good for Coinbase. And that's a reason not to be that bearish on Coinbase, right? It's sort of like, again, we took off the uber bear case, like the zero, right? We were it's yeah, I think we were like the bears on the street forever on Coinbase. And Ryan and I looked at it and we're like, what? It's a neutral. It's better than we thought. It's not as bad as we thought, and it's a good company. Robinhood is better, but it's a good company, and the consumer that's trading those tokens is still very price inelastic, which is kind of very good, right?
Yeah.
Like you want to be. I used to cover pest control my prior life. I know it's like the CEO of Pfizer, Frank Bisignano, always jokes around when he sees me. He's like, when I met you, you were like a pest control analyst and payments. Like I have no idea what the two have to do with each other. But like those companies are like the best companies. The cockroaches always need to get killed and they don't care about multiples. And like the CEO of Rollins once told me, like, how it's a good business is if you can like mismanage it and it would still work. I'm not saying they're mismanaging Coinbase, but the analogy here is like you could charge high prices and like do whatever, but because people are so greedy and they want to trade crypto, they'll still trade it even despite the high take rate. So it's a good business.
Right, right. Yeah, I guess to that side, it's fine. However, I'm not taking any positions in
Yeah,
Coinbase
yeah,
just
no,
on
I'm
the.
definitely not a hater. I'm not a hater anymore on Coinbase. I'm not a huge lover, but I'm not a hater. I'm neutral.
Now, um, before we get into any sort of upstarts or shift fours, but maybe we
Mhm.
need these names in order to complete the cycle here. Do you have, I think I asked you for a top three last time. Do you have a top three this time in
Oh,
terms of,
easy, easy.
go ahead.
The most torque. Top three: Robinhood, Affirm, Upstart.
Robinhood is number one.
Number one.
That's taken place.
That
I think it was Affirm last time.
it's taken place because I think the just the opportunity again, they're I mean, I love all my children, but so it's points, not a knockout, right? But just Rob the like to me, them getting into the UK, I heard from Vlad, like I wasn't at that meeting because I was in Israel, but my colleague here attended the meeting. Like they're I think number two most downloaded financial app in the UK or something like
Really?
that. Yeah.
Yeah, how is that going? I have not, like, they said
Apparently it's
something
going
about,
really well. Apparently it's going really well. Like
they sent me
apparently
the
like it.
report on the 100,000
Yeah, that's
uh,
it. That's it.
international users, but does that include crypto or is that just UK users?
That I don't know. It's a good question. I have to go back and see what we it's partly because I wasn't in that meeting, but I can get back to but they're doing really well, right? So
Yeah,
the downloads are like off the charts. They're gonna launch in Asia in
yeah,
25. They opened that, when we saw each other in November, they announced that they opened the office in Singapore.
yeah.
I'm like, everything you're seeing now, just double it. Double the users, double the volume, double the everything, right? It's like it's it's like more of everything.
Are
So
you,
it's like and that's what makes me so bullish because I'm thinking, okay, so even if trading volumes in the US are volatile and some days they're better, some days they're worse, you're going to get that expansion and instant sort of market share gains in high crypto, geographies like Asia, where there's an affinity to trade crypto, and they don't have to do much advertising. Everybody knows Robinhood. They're the best at sort of that gamification of trading.
give
And
me
for Gen Z,
the Wall Street 101 of how to model a company like Robinhood.
oh, it's actually really easy, and they do a great job at explaining it too. Um, or just like put like their presentation is by far like the easiest one. Like they make my life so easy because sometimes I have to like let's say I do like a 4:04 p.m. CNBC after they report. I have to like download an enormous amount of information, write a note for regulatory purposes, and go on TV within 5 minutes.
Yeah.
And they make it so easy for me, right? Because you think about it, you have to like absorb all the information, and then within 5 minutes you're on the air. And I have to get out a short note for to just fulfill regulatory purposes. So I would just look at ARPU. It's all about ARPU, right? So you're basically like the way I model fundamental is you look at how many users they can get, what these users are doing, and what else can you sell to those users, right? Love the dog, by the way.
Yeah.
I have one too. Um, and so users times user growth times product per user gives you and revenue per product per user, or sort of then that gives you sort of your revenue, and
But
then
what
that's
I
it.
find though, I find with a company like SoFi or even Shift4 to some degree, uh, what they say is essentially what's going to happen, or even a little bit more is what's going to happen. There, like if you look at a long term, charts of SoFi's growth, pick any metric, they're pretty linear. Uh, Depending on know whatever they're pushing during that time, student loans,
Mm,
personal loans, financial services. Um, Robinhood is all over the place. And I find it hard to understand. And now I'm a Super Bowl for Robinhood, but where they're going to be next because it's so macro dependent.
mm. But the hedge, I agree with you. Yeah, SoFi is more stable, right? It's sort
Mm-hmm.
of like it's like a restaurant, right? Sometimes you want pasta, sometimes you want steak. Like it depends what your appetite is for. If you want that risk and excitement, but also less stability, you go with Robinhood. To your
Sure.
point, because tomorrow crypto volumes could tank for whatever reason, but the stable kind of like personal loan business for SoFi is still going to be there.
Are you
So
guys
that
tracking crypto volumes? And
every day, yeah,
what does it look
not
like
every
for
day, but
March
we
right now?
track it. I mean, that's what we published actually on Coinbase um, the other day or day before yesterday. It's really strong. I mean, I don't know the numbers for Robinhood because we don't get that third party data for Robinhood, but you can imagine all else equal, it's pretty much the same for on an average daily basis for March. They were like in the $5 billion a day, and that's about a little bit higher than the 4.6 billion average 30-day before that. So it's actually holding up, and it's holding up for Robinhood too. I bet you it does.
From February, you mean?
I bet you it does. Yeah.
Wow. Wow.
So it's really strong. Now you could say maybe that people are like running for the exits, and there's like a stampede on the way out.
Mm,
And so when they're buying and everyone's selling, their volumes are high too.
sure.
And then the
Sure.
question is, will they come back? I mean, that's a good question. But fortunately, all this is driven by greed and FOMO. And so it's the gift that keeps on giving. They'll come back at some point.
You
I have
probably
no
saw
doubt.
that report on Robinhood, or not report, sorry, but Vlad speaking. I forget where he was talking, but I think they said they have a 12% attach rate for gold now.
Hmm.
Like these are insanely fast adjustments to what we saw just from Q4, and it's been a month or
I
two
agree.
months at the point whenever he did that call.
You know, I agree. Vlad's a killer. Like he's as good as they come, right?
What I find so interesting though is like even if the market is tanking and people are selling off from crypto, they're probably not leaving the platform because they're paying for
They're not.
gold, so they'll just
Correct.
rotate it to cash.
I agree. And then they'll come back when they sense, that's what I'm saying, kind of the FOMO, they'll come back when they sense that Bitcoin is going up again.
Yeah,
And it will
yeah,
at some point, right? So that's my point. It's like greed and FOMO is like great primal instincts that are fueling, you know, and it's not and um it's not just there, they make it happen, right? Because Robinhood is so good and Vlad's like probably the best CEO in the space. He really knows how to like create that environment, that gamified environment, and they do it better than anyone else, right? And I think that's what that's why you asked me, like, what's your number one pick? I was like, Robinhood, so good, right? And more geographies, more people, more products. That waterfall chart that they showed at the analyst day was amazing, right? With
sure.
the what is like $600 billion TAM or whatever insane number that they're putting out there.
Yeah,
I think
I
they're
was
gonna
mainly focused on just
grab
the
it.
active trader part for now,
I mean,
but
think about it, like 600 billion, right? And if they take a 5% share, that's a $30 billion of revenue. What are they doing? What did they do last year? What, three to four?
three, yeah,
Three. So it's 20x.
yeah.
That's it. Simple as that. So simple, right? If 5% share of that 600 is a 20x revenue growth in the Robinhood model. That's all you need to know.
Your number two was
Firm.
Affirm.
Look, same story, right? Like they're the X on buy now, pay later. They're doing better than Klarna, right? So Klarna, we did some analysis. Like they're like way more profitable than Klarna. I think more than double. Their take
Wow.
rate is higher. The reason for that is because Klarna is like paying for, and paying for is commoditized. And only like I think 15% of a firm is paying for, mostly interest bearing. They work with Amazon. So when you do a loan with Amazon, Amazon doesn't pay you. The consumer has to pay you. It's very, very hard to underwrite these types of loans. And like there's only like a handful of companies that can do it. And the firm has it all, right? It's got the data, it's got Max, got sort of the PayPal co-founder
Yeah,
there, like the
Max
genius.
Levchin is what he's talking about, the founder.
He's genius, right?
Yeah,
So it's like a genius-led company, right? Instead of a founder-led company, it's like a genius-led company. Like you
yeah,
don't get that many. You get, it's like, it's think about it. Peter Thiel and Elon founded PayPal back in the day. Pretty good club to be part of.
Yeah. Yeah. And everyone attributes Elon Musk to be the original founder, but it was actually Max,
It was
you
Max.
know?
Max wrote the code. Max
Yeah.
wrote the original code. He's like, yeah, look, I'm very good friends with him. He's amazing.
Yeah.
I mean, he's a real genius, and they do such a good job. So I think like it's like the same story as Robinhood, it's just that they're in a different niche. So they're doing they surpassed, Square. They now Square or Block or XYZ is taking a page. I know it's like the name change kind of makes me a little worried. I still see a lot of opportunity there, but I just don't like the name changes all the time. Um, so now it feels like a firm is the thought leader with the firm card and like everyone else, including Square and the Cash App, they're taking a page out of a firm. So I like what I see there when that becomes like there was 5 6 years ago, Cash App was like the most innovative app. And I
Yeah.
feel like now the pendulum has shifted and the firm is doing a better. They're going to be, if you're using a firm, at some point they're going to try and be your bank as well. So they're
That's
going to try to bank you.
that's totally my understanding. And I don't own this company actually. It's one of very few list of fintech companies that I do not own. Um,
You should.
maybe, maybe.
You should.
I never understood why, like you said, the underwriting is very hard, but I never understood why banks and all these financial institutions that are so into credit cannot come in and understand buy now, pay later. And
Because, sorry, what were you
no,
saying?
no, no, go ahead.
Because it's easier said than done. It's easier said than
Well,
done. Okay, let me
that's
give
what
you
the
one.
track record is
You want
showing
the
us.
proof? You want the proof in the pudding? Apple tried it and failed.
Yeah.
Apple,
Yeah, but they're not a
mighty
credit
Apple.
company.
I know, but it's Apple. Like,
What I'm
they've
wondering is why can't JP Morgan or Capital One get into this game and dominate? And I never understood why, especially JP Morgan. They have the merchants, they have the cards. I
they don't have that. They don't have. I tell you what, they don't have. They don't have the sex appeal that Max has created, the app and the marketplace and all that on the one hand. And remember, when you talk to Max, and I spent a lot of time talking to Max, he says we're in the business of taking risk, and we use data that we've gathered over like a decade and a half. So I just don't think that JP Morgan has this, like, let's call this like level three data on specific buy now, pay later delinquencies. So they're gonna have to like build models from scratch. They have a lot of data on like consumer loans and stuff, but it not in that niche. And so it turns out just an app, it's just the same thing like SoFi. Like, why does the SoFi Stadium matters? Why does it matter? Because it matters. Because
well,
it creates this sort of visibility that, that a firm has, that SoFi has, that some of these other guys don't have.
I find another thing that's happening in the market right now. This is another reason why I never decided to go with a firm. Is like I think there was, especially in recent history, has been a lot of price sensitivity to credit card. It's charging merchants 3%, or especially
Yeah,
PayPal
it's a
even potentially
ripoff.
charging a little
Yeah.
bit more, or in this sort of vein of payment companies taking more than their fair share. And then buy now, pay later comes out, and now they're taking 6%. And so I've just always found it hard that the take rate was not going to come down in some sort of way. But they have to be high because it's a credit product.
Hmm.
It's a credit
They're
product
charging,
designed for people, for the most part, that are in lower FICO score areas.
and sometimes it's like daddy pays the bills, right? But
Yeah,
it's
but
not
then
always poor people. But there's a good amount of low FICO people that use it.
so I think the last time I checked my credit score was like 830 or something. I've used a firm a few times, but the only time I'm ever going to use it is if it has 0% APY, because why not? I'd rather the money in my pocket than theirs. So
Right.
I'll click the button if it's there. But I know that the merchant's paying that rate, So if they wanted to pay that to have me on their platform, but then we're not talking 6%, we're potentially talking even higher. So I just
And it depends. And like, for example, like the most recent quarter, I think they reported like they have this new thing where the merchant pays a bigger discount rate to help conversion. And and that product was up 70%. So I think what you learn is that the agility and the ability to know, okay, this is an environment. It's like think of it as like, I mean, just the analogy is like real estate. It's like, is it a buyer's market or a seller's market? So sometimes it's a buyer's market and and the merchant has to pay
Sure.
more of the interchange. And sometimes it's a seller market, and then the consumer is comfortable with paying the bigger interchange. The the challenge or the ingenuity at the firm is that they know exactly what kind of a sentiment it is, and they can like be like, okay, this is an environment where the merchants have to, chip in and give you a little bit more to help their conversion. By the way, recession, it's the best buyer's market, right? So that's the market where the merchants are going to be like, you know, do I want to make a sale and sacrifice 20% or do I not want to make a sale? And this is a great and this product that the firm has allows the merchants to actually, you know, keep price integrity by showing that the same price and then the consumer doesn't pay anything, but they're paying a firm their 20%. So there's the ability to do that. I think that's what makes the firm so great, and that's a skill by itself. That's what I'm saying. It's not. It's easier. It's much harder to replicate than people are thinking, and that's the reason I think Klarna is just paying four. It's because they can't replicate it, at least not as of now.
Yeah. What are your thoughts on potential trade war or even recession? Which one of these companies benefit? Obviously, people think about uh, PayPal with their global presence that might be
Mhm.
interesting. What does a firm do in this case? What does Robinhood do if the.
I mean, Robinhood is, I mean, I'm looking at there's two kinds of companies. One, like the ones that could, three kinds: benefit, suffer, or agnostic. So
Sure.
Robinhood is agnostic because it's like you're trading stocks, crypto. I mean, obviously, volatility and stocks, that's out of our control, but it's like a place it's a good stock to own that's uncorrelated with trade wars other than the second impact of trade war, which is volatility in the markets. But that's a different thing. Do you know what I mean? Like they're not directly impacted by the trade war. A firm, in a way, could be a beneficiary of a trade war, again, because of the mechanism that we talked about, which is they can help merchants. Let's say prices go up of, I don't know, Canadian steel go up. I don't know anyone that's buying Canadian steel with like buy now, pay later, but you know what I mean? Like that, but whatever, different example, maybe, right? So prices go up, the merchant can preserve price integrity and then pay a firm a little more, take a little lower margin, but make sure that the consumer doesn't see that inflationary impact. So they're net beneficiary. On the networks, I think it's more of like a one-to-one thing. So trade war could be probably not good for the networks because they don't have that lever that a firm has to the buffer.
Sure. Sure. It's interesting. I like the point that you said on a firm, like where does their product lie in this sort of thing. But also, I mean, if people are paying more for their steel in one area, are they going to, is that still going to suffer in some secondary event for a firm? Or does that mean that buy now, pay later increases because people need more credit or
Yeah,
deferred
if the
payments?
consumer suffers, actually, it's a good segue. If the consumer suffers as a result of, and we didn't talk about my third topic, which is Upstart, as the consumer suffers, it's actually good for Upstart. So now we're talking about sort of the most counterintuitive out of the box thinking here.
Sure.
So remember, Upstart is they're doing personal loans, right? They're doing unsecured personal loans for low FICO consumers. Great business, right? You're giving money to people that don't always have the money to pay you back.
Sure. Yeah.
Amazing
Great
business.
business.
Almost as good as like sell side research. Um, and the the counterintuitive thing, and we saw them last week, we saw the founder last week. The counterintuitive thing that which people don't appreciate is when consumer slows, they actually have more money in their pocket to pay down their indebtedness. So in a weird way, a bad consumer, not a really bad consumer, there's always like an equilibrium, not, you know, kind of a lukewarm consumer is good for Upstart because it lowers delinquencies and then the market sees that and the stock goes up because delinquencies are like the number one thing that hurts the Upstart stock. Because remember, like there is no shortage of people wanting personal loans. The key is, am I going to give you the personal loan?
Right. Right.
It's the demand is infinite. They have no demand problem. There's always going to be someone standing in line. Yeah, I'll take a $10,000 loan, please. It's like, but will you pay me back? What probability are you going to default?
And that gets better if the consumer is weaker.
Yes, because they don't spend as much money on like buying Nike and stupid things. I mean, not Nike specifically. I don't know. Hoka, whatever that shoe is.
Sure, sure.
I said, am I pronouncing it the right way?
Hoka, I think.
Hoka, not Hoka. Okay. Hoka, right? I'm not discriminating here. New Balance, Nike. But they're not buying stupid things, discretionary stupid things. And then they have more money in the bank and they're, oh, maybe I should pay down. It's just a natural phenomenon. You have a little money on the side, you're paying. Now, all this formula gets kind of becomes a mess again if unemployment goes up. So I again, this is a fine line, but right now, at 4% unemployment and a slow, how about this? 4% unemployment and a slow downtick in consumer is a net positive for Upstart
And
because the delinquencies come down.
and what happens? This is another thing. Like obviously, I'm big into SoFi. In these sort of macro events, what happens to capital markets? Are investors still purchasing unsecured personal loans from Upstart and SoFi and the likes, or
So
are these also considered really risky in that they try to defer from these types of investments?
it's a great question. So it's naturally not great. By the way, the Upstart, the SoFi's lending platform is the exact replica of Upstart. So
Right.
it's a great business. It's the same thing, just a different FICO. So SoFi is like 745 FICO and Upstart 620. Yes, in a bad environment, it's harder to sell those loans, it's harder to get capital. Remember, the last cycle in 22, the reason the music stopped is because not because people didn't want loans, it's because Upstart couldn't get money to make those loans. SoFi didn't have that problem because they're a bank, so they have deposits. Upstart's not a bank; they need the money from third party. What they did now is they secured long-term capital. So in the next RIF, it's not going to be as bad as the prior one because they're going to have like long-term secured capital and they're putting some skin in the game as well. For SoFi, remember they have their own deposits to make loans with. And I don't know the specifics of the deals on the lending platform, but that's just one other vehicle that they do. So SoFi is like inherently more stable. Remember, they were making personal loans even during like the 22
Yeah. Yeah.
um, mini
Just
crisis.
housing them on the balance sheet, though, because in my
Yeah,
opinion, I thought there was not a lot of interest for their loans.
yeah,
They
they're
said SoFi came
balance
out
sheet.
and they said that there's uh still a lot of demand, but it's actually more advantageous to hold it. But I don't know.
Yeah, I mean it's like that calculus is every day. It like they they assess it every day. Do you sell it? Do you hold it? Kind of what's the premium to NAV or
Sure.
the like 104, 105. But at the end of the day, I think look, I think that all these companies survived the peak interest rate environment, unless I'm missing something here. I don't think rates are going up. 10 years just came down, right? I don't think rates are going back to 23 levels. Inflation was just below expectations now, right? Like zero
Sure.
point 0.2 versus zero point 0.3. So we're all good. If all these companies, Affirm, SoFi, Upstart, if they survive like 5% interest rate environment, they're pretty bulletproof. I
Yeah.
guess unemployment could be another wrench. Um, I've people are worried about 25% unemployment because of AI. I mean, then we should have another podcast. Like, I mean, there's a different. It's the Armageddon there, I haven't thought through that. But unless unemployment goes to 25%, I think we're good on these companies, on the risk for these companies.
Last topic of the day, Shift 4. We were talking about genius founders. In my opinion, Jared Isaacman falls under that list,
I
but
would agree. I would agree.
he might not be there.
He's not there. Yeah, he's at NASA. Or did he get confirmed yet? Or
I
he's
don't know
coming?
if he's gotten confirmed, but he's definitely leaving. And to be honest, and this is not like confirmed or anything, I don't think he's going to come back.
I
Um,
don't think so either. I don't
I
think so
think, yeah,
either.
I think space is so much cooler than
I think he's
payments. You know,
done.
you hear it in the investor days calling it a boring company, stuff like this. Like,
Yeah, I think he's done. I mean, look, he's been doing this since he was 16, right? And he was trying to sell the company. It was public, right? Um, Back like a year ago. Just couldn't find like a buyer at the price.
yeah,
So I don't think he's coming back. Um, but it's a good asset. Like it and actually surprising, I was just talking to an investor today. It held up pretty well despite all the turmoil the last two. I mean, it already got it had its sort of day in the sun after the analyst day where it was down a
yeah,
lot.
yeah,
Um, but I think look, it's what I would say about these guys, and Taylor is great, and I know him pretty well. We have actually a mutual friend. I met Taylor even before he was there when he was different life. We had drinks with a mutual friend of ours, and then I
sure.
bumped into him again here. Taylor's great. The I think that the thing to say about these guys is they're very, very crafty, and their CAC, they said it at the analyst day, but it's funny, like we literally, that was like our initiation. Their CAC is so much lower than their competitors. Like I love Toast, but man, like Toast pays so much more to get a customer in the door than Shift4 does. So they've really proved that they could do more with less. And I think that's something that they've got their own unique niche of low customer acquisition costs and crafty deals. Like the most recent one, the Blue
Global Blue.
something, Global Blue. Yeah. By the way, I tried to use it once in Ireland with my wife, and I never saw the money. But I don't know, maybe if you talk to them,
Yeah,
see what
I'll put
happened.
in a
They never
word.
they never sent me the money back. Like I put in the envelope with all the receipts from the shopping spree that my wife did, and we never saw the money. But maybe that's why it's a good business because they don't pay you.
Yeah,
They keep your money. No, but they're very good about this, right? I mean, Shift4 is as good as it gets in terms of finding those, like uncovering those sort of like deals that no one else. I think there's a spot for them. I think there's a real spot for them in the ecosystem. They'll never
yeah.
be as good as Toast from a killer app perspective, right? Or they'll never be as ubiquitous as Clover, but they have their niche and they can find value at where other people don't see it. That's really important. And I think that it is Jared, but I think Taylor and like these guys kind of know how to do it.
You think they'll
They've
do
spent,
fine?
I think so. I think they've spent enough time around Jared to kind of know how to. And it's also good to have someone that sort of can like knock on the door, walk into the Oval Office, and
I was
have
going to say he's
come
not
for
going to step
business.
away if he has equity in the company to the degree that he
Correct.
does. I mean, he's always going to be there for some level of advisory.
Yeah, like Starlink. You're in that Elon ecosystem, right? Like you can be like, oh, here's an opportunity to, let's do merchant acquiring for, I don't know, Russia. They're doing peace now. And Trump's gonna be like, sure, let's do it. So it's good to be close to the plate. And I
Sure.
think that puts Jared very close to the plate right now in terms of where decisions are made and where money is being spent. So it's a good place to be.
Got you. No, I think those are so many great things. I appreciate all the time that you gave us.
Yeah, of course.
Um,
Caught me on a slow day, but this was fun. This was we should sorry for having to last minute cancel last time. I couldn't control it.
no, 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 that's no problem. It only
Yeah,
made
so
the
what did we
viewers
learn
upset.
today?
So
What did we learn? PayPal is the next Nvidia. That's it. You've heard it here first.
PayPal's the next Nvidia. Um, Coinbase is not as crap as I think it is.
I agree.
Um,
Good. And Robinhood is going to the moon.
Robinhood's going to the moon. Marquetta and Galileo will be fine.
They'll be just fine.
Yeah,
It'll
there's a
take
lot of
time
great
for
points there.
Marquetta. It'll take time for Marquetta, but it's going to be it's actually a great opportunity. Stock's so cheap. Either way, it
Marquetta.
gets bought. Yeah, it gets bought. It goes up. It survives. It goes up. A win-win.
What's their market cap right now?
It's like appalling. It's like one and change, I think, billion. And like it's sub 2 billion, I think, at
I
this
mean,
point.
I wouldn't mind SoFi taking a shot at that, but
Yeah, who knows? Let me see. Before I leave you, let me just give you the exact number of the market cap. Yeah, I was right. 1.3 billion. Sorry, it's two. No, it's 2.6 billion, but they've got, or it's 2 billion, but they've got like a lot of cash. So it's like
oh, the
enterprise
enterprise
value is
value.
actually, yeah, enterprise value is like 800, but the
So
cap
what do
is
you think
higher.
based on their growth that someone would need to put in an offer
Oh,
like double that number or
I don't. You never know. I have no idea because there's all these rules about where it traded. Like last, I don't know
okay,
I don't
got you.
know if they're. I don't know, but I just do know that there's a put option. Let's pull it like the put. It's like the PAL put option. There's a put option on Marqeta because in a worst case scenario, it's a great feature.
Yeah, yeah.
It's not going
Interesting.
away.
Interesting. Who would be the buyers of that? Like Visa or something?
I think one of the big banks could want it. I don't know again if I don't even know if it's for sale, but I'm saying and I don't want to I have no idea, but I'm saying just in general, there that feature. I mean, Visa has a business that's very much like Marqeta,
Yeah,
right? The Visa.
yeah.
I'm not saying they're going to buy them, but I'm saying is like there's a lot of big financial
Visa
companies and banks
DSP
that
or DPS?
DSP, BPS, yeah, exactly. That's a
One of
big
those.
part of their value-added services business.
Yeah.
So it's not a it's not a business that people don't need. Obviously, Visa needs that. It
Right,
has it.
right.
So it could be a big bank that, but so I'm saying there's a put option there. It's someone's gonna it could be useful for someone in case it doesn't work. But I think it'll work. I'm optimistic.
Ladies and gentlemen, this has been the great and powerful Dan Dolev. Thank you so
Thank you
much for
very
your
much.
time, my man. I appreciate it.
Thanks, Tanner. All right.